Good morning, traders. Welcome to the Elliott Wave Street weekly update. We're starting a new week. We're going to check the live markets. Don't forget that you can receive our analysis, daily analysis. You can get the daily analysis every day inside the Elliott Wave Street membership. All right, so let's start with the euro. This week, we are expecting a good entry on the euro finally, after this boring and slow price action. Let's have a look at the price action during the month of December. Look, after these two candles, the red one and the green one, that was on November, right? Two candles, the price has been contained inside that two candle price action. That's crazy. Then we can add a line at this area around the 1350. We can add another one here around the 1270, and that's it, just with the price one day moving outside this area, and that's it. But most of the time the euro has been trading inside this tight trading range during the whole December and the end of November. That's really weird, and it's happening the same on the dollar index. Price is completely sideways, so it's difficult to capture any swing here inside because we are not going to the extremes, just one time here. So let's have a look from the institutional point of view what's going on. All right, so first of all, the ones who went long during this cycle or before, and they have their stop here below the pivot, the market went down and take them out, all of them. Big cleanup here. Then we have other participants going long anywhere here during the whole move up, and the institutions do the stop hunt and they take them out right here. We have other participants who went short. Some of them might have the stop loss here, so we have a liquidity area here pending to be absorbed because they try during this market cycle here, but they couldn't reach it. And also we have all these buyers where they have their stop, most of them right here below the low. So the trade plan for this week is going to be simple. We need to see the price falling into this area in order to take out all the stop losses right here. And on the hourly chart, if we have a green candle showing up after some red candles, closing above this area is exactly the point that I'm looking for. The level that I'm looking for is the 35, so I need a candle close above that level. I'm going long, and I'm going to target at least this previous high, the 113.82, and then we will see. But at least to capture this big distance. But we need to wait to have the discount. We need to wait to have a good discount here at the lows in order to go long. We're not going to buy here at the actual price because it doesn't have any sense. It's too expensive to do something here. So we need to wait for the price to give us the discount and then go long. But there is a trade that is closer to the entry and is the New Zealand dollar. Let's have a look. I think today we might see the entry. So first of all, we have an impulse on the left side. That's good. And now we're seeing a corrective, is a double zigzag formation. So the price already showed an entry when the price went down to this area, to this demand area here on the left, and it rejected. That was last Friday. The price comes higher, so enough to book some profits At that stage, we could think that this was the end of the corrective, but then the price started some aggressive price action and it started to go down. And look, here is the next opportunity. Today might trigger. We need to have a couple of red candles, 1, 2, whatever, moving below wave W. I would like to see tiny candles at the end. You know, tiny candles mean that the big guys are accumulating. And then 1, 2, 3 candles, whatever, above this area. Rejection. Rejection of what? Rejection of this low. They were just a stop hunting. And this one here that is pending. So this could be a cleanup, you know, cleaning up all this area of those who are already long. We have plenty of buyers here. We have more buyers here. So this is an area where clearly we're going to have some good orders, pending orders, stop orders. And once the price cleanups this area, once the price clears this area and rejects, we need to see demand on the hourly chart. That's extremely important to see demand. Without demand, we are not going to trigger. Let's say, on the other hand, that the price just continues here and here and here and makes some red candles instead of rejecting. Well, it's a different scenario. It's a different thing. So we are not going to buy because the price is going down. That doesn't have any sense. We need to see tiny candles. We need to see the price rejecting. We need to see the price absorbing this area. And from there, I want to start going long on the Kiwi. The minimum target is going to be the previous high. So we have a good distance from the entry to the high. Finding the end of 2 to ride wave 3. Let's have a look at the fantastic S&P. Wow. On the S&P, we were able to plan the whole trade. It was a beautiful setup. Let me show you the you have been seeing the analysis here in my YouTube channel with the S&P on previous videos, but also I posted a tweet. Let me find it. About the plan, about the trading plan that we were having for the clients, for our clients. So here it is. Look, so I posted this tweet originally on December the 1st. So we have massive sell-off on the S&P. Here is our Elliott wave point of view. The price could move lower to start showing some accumulation. Clearly, we didn't have anything there. Before the possibility of a bull reversal, right now we have a clear withdrawal of liquidity from the big guys. So, look, we have right there the price doing this leg down, but we were expecting the price to slow down and start showing something interesting here in order to go long back to the highs. You see the beauty of Elliott wave? We can plan these trades from days, from weeks before, but of course once the validation shows up. So the price continues when comes down to that area that we were looking for. From there, we see the accumulation, we see the double bottom, and it starts the move up. On the hourly chart, last week, we were working with our clients to find the end of 4 and target at least the end of 3. And now we have to be careful because the S&P could extend a little bit more the move. You know, it's easier to find bottoms or the end of corrective waves rather than tops on the S&P, because the thing is with the S&P, sometimes you see the impulse and then the wave 5 starts extending like this for a while, and it could very easily run 300 points in this behavior here. So let's say that the DSP here can start extending and moving to the 5,000 area or the 800 area. I don't think so, but it's possible. So it's time to book some profits from that long trade on the S&P. And let's get ready, because once the price re-enters this area where the wave 3 finished, that's going to be the validation that we are going to have a corrective. I don't think that is going to be a deep one. It's likely to go back to the previous wave 4, maybe the 620, the 600 at the most. But this is going to be another setup to go long, because after this corrective, I'm looking for a huge move up on the S&P. 5,000 area, maybe higher than that. So after this corrective wave, we need to buckle up. But of course, once we have the signal, the reversal, because right now we don't know how deep the corrective is going to be. So right now what we know is that we should book profits from the bull trade, or leave a small fraction of the trade open just in case it extends. It's not a short trade at all. You know, it's a big mistake to try to find the top on the S&P. Most of the times it's not going to end well. And just follow the trend once wave 2 is done to go long again. And let's have a look at oil. Oil is interesting. We have been working on the plan on seeing oil going down to the 40s to the 50s. Has been working fantastic. For this week, I'm looking for a lower low on oil. Look at this beauty. We have 1, we have 2. It's failing to make a higher high, so this is extremely bearish. Looking for the breakout of wave 1, an acceleration during wave 3, and the price making a lower low before the next corrective wave. So this one looks pretty good. Seems that the market is ready to go down to make the lower low. And I see oil next year around the 40s, the 50s. All right, traders. So that's the plan for this week. Don't forget that you can get our daily wave counts, daily report, daily videos on ElliottWaveStreet.com/membership. Let me show you what we have. Plus, we have some education, some really good education. The Elliott Wave Basics, the Elliott Wave crash course is there as well. So look, here, if you go to ElliottWaveStreet.com, then you click on the membership tab, you're going to see all the memberships that we offer. We have the Forex, the stocks, and the full access. So you can get here your trial for 1 month. I'm gonna work the entire month of December. So I'm gonna continue providing reports during the whole month. Actually, this year, January the 1st and December the 25th is Saturday. So this year, I'm not going to stop any day, because on previous years, I usually the only day of the year that I don't make wave counts is January the 1st, but this time it's a Saturday, so I'm gonna provide the reports every day during the whole month. So you can grab your trial, receive immediate access to the live market analysis and the Members Academy. That is fantastic. It's almost complete. The lessons with the Elliott Wave crash course, with risk strategies, with tactics. So it's fantastic, and it's included in the membership. All right, traders. So that's the plan for this week. Thank you for watching. Have a fantastic start of your week. I'll see you soon. Take care. Bye-bye.